one shows D and D, right? I don't see a moon. Okay, what just happened? All right, guys. I don't know if anybody's there. We're having some technical difficulties again. So we got people joining us. We appreciate you. We've got a whopping 4, 8, however many are joining us right now.
Guys, you know what you're here for. You're here to get your answers questions. You're not here to waste time. You're not here to watch a couple of guys talk, say some stuff that you don't want to hear. You guys want answers on how to buy a house. You want to know
And
where to go.
one-time construct. Let's talk about one-time construct because I'm very into that.
Hold on.
Yep.
You want to know where to go, how to do it, who you need to talk to, and that's what we're here for. We're not here to waste your time. We're not here so that you guys can watch a couple of guys argue with each other or talk about Trump every now and again. You want to hear about how to get you advanced in life and how to own a piece of the American dream, whether it's buying an existing home or
One-time construct. I'm very much leaning into this one-time construct thing because one is getting more popularity with all the banks and the federal government. So FHA has one, VA has one, and USDA has one. This is where you go and you say, hey, I want to pick the land and then build my house. It has to be your primary residence. You can't be a brand new kid going, hey, I'm going to be a builder and use a one-time construct. That's not how it works. It has to be your primary residence, but we're going to teach you how to get that one-time construct American dream. Bill Gross says, the American dream. You're right. Build that land. Now, I've actually done that. I bought the land. I didn't use a loan. I was in a spot where I could pay for it as I went, but it's a lot of work. It's not a little bit of work. It's a lot of work. And it's so much frustration, and it's a lot of stuff that you wouldn't even think about. But when you're done, it's unbelievable. You're like, I built this. You know, almost everybody says, I don't think I'll ever do that again. But the truth is I am going to do it again. So we're going to teach you how to do the one-time construct. He just went through some more certifications, some more classes, took some more tests to make sure that we're tip-top of the spear and we know what's going on with the guidelines, which programs are good for you, which ones work, and how to build that home from scratch. Like you don't even own the land yet. It's from scratch. But aside from that, we're also going to teach you what's going on in the markets, whether or not it's a good idea to get a loan today, what the rates are, how much you qualify for, a whole bunch of stuff. Zero down programs. We got everybody asking about zero down programs. And when I give the answer, it's a truthful answer. It's a very truthful answer. But a lot of people don't like it. And the truthful answer is, hey, I don't think they're great. I don't think down payment assistance programs are great. Matter of fact, if you have the choice of not using them or using them, I'd say don't. Never. Because there's no free money. They like to sell it like it's free money. And the one that actually seems like it's free money is the worst. It's the worst down payment assistance program, in my opinion. In my humble opinion. It's humble. It is humble, right? So, in my humble opinion, the one program that everybody thinks is the greatest program, I think is the worst. I think it's the biggest scam, and I think it's people, the way they hide things right in front of your eyes. I'll tell you about it in a little bit, and we're talking about Dream for All. When I break that apart, it just hurts my soul. But I also understand how the population sees this, and they think it's a good idea. Kenny, do we work out of certain areas? All 50 states, Kenny. All 50. 5-0. All 50. F-Y-T-I. 50. All 50. We work out of all 50 states. We're currently in Riverside, California. My primary residence is Austin, Texas. But we do all 50 states. Kenny, we're here for you. What do you got?
But the question is, do you work out of a certain area? Of course we work out of a certain area.
He works out of his office, and I work out of my office.
A certain area.
Yeah, certain area.
We can help you in your area.
if you ever came to our office, you would go like, hey, you guys have pretty nice offices, but this building is gigantic. There's so many offices in this building. So many.
All right, guys, load up that chat box with the questions you have about buying a house, building a house. All the questions that you guys have. If you already know what to do, don't even be here. Yeah. Don't waste your time here, guys. Waste your time. A lot of people are wasting their time nowadays with some BS. Just looking for entertainment. Forget about that. Go to another channel that can help you with something
this
you
is
need
for
help with.
Education and entertainment. We try and entertain
and
you,
help.
but and help.
Real help.
Yeah, like real help.
We put people in houses.
We have helped people, a lot of people. Yeah.
So load up that chat box with your guys' scenario. And this is what I'm talking about. Bill Gross. We live in the richest country in the history of the world. Do you know how many homeless we have? We're not solving that problem here.
Bill. I agree with you.
Exists.
It's horrible. It's
bad.
Disgusting.
It's
but
bad.
It's not a functional problem. It's a mental illness problem. That's a whole different category. You get into politics. I have a house in California. I've been up north to California. I haven't been recently, but I've been up to California where I've seen the homeless. I've literally gone to Grand Central Station, or what do they call it in LA? What's Union Station. I got to Union Station. You get out of Union Station, and it feels like you're in a third world country because there's homeless people everywhere. It's weird. It's a way of life out there. So we try and help the people that are helping themselves, because that's kind of life.
Yeah, Bill, you're wasting
got the questions coming in, man. I appreciate you guys.
Time, Bill. Slim, should I just rent? There's no homes for my budget unless I want to basically redo the house.
Slim. That's okay. So let me give you something that happens reality. Okay. So let's just say I don't know all your scenario, but I'm going to build it for you, Slim. You got a girl. You ain't married yet, but you got a girl. And it's the two of you guys. And you know what? You want a two-bedroom apartment. And I know you live in a populated area like Atlanta or Miami or Los Angeles or New York or Chicago. And that two-bedroom apartment, that's $3,000 a month. Nice area. You can go to the lower end, get $2,200, $2,800. But you want a nice apartment, decent apartment, $3,000 a month. Okay, $3,000 a month, Slim. That's where you're at. That's what it costs. $3,000 a month. Now you're paying your apartment $3,000 a month. Over the year, you've paid him $36,000. What? Real. Okay, so for 3 years, you've paid him $100,000. Do you know what you'll ever get from that money, Slim? Nothing. Not a dime. Nothing. Now let's flip that. Let's just say you went and bought a house in that same area, but $3,000 a month doesn't buy you a lot of house. So you're gonna have to buy a lower end house. Okay, so you're not living in a nice apartment. You're living in a lower house. All right, cool. So you buy that lower house and you pay $3,000 a month. Over 3 years, you still paid $100,000. But here's the difference, Slim. In those 3 years, you paid down the principal a little bit, not a lot, a little bit. But also, your home is appreciated a little bit, not a lot, a little bit. But that spread got nice. And when you were doing your taxes over the last 3 years, you were able to write off everything. What? Everything. Now, Slim, you paid less in taxes, you've burned down a mortgage, and you have some equity appreciation. Those are two different lifestyles. One is rent, one is own. So, given the choice, I go with own.
Diablo, that's the worst. I don't know what you're referring to.
No, he's talking about the Home for Dream for All program. Okay. It is the worst. It is the worst. Diablo Mortgage is in the house. Is this the guy who was mad at me yesterday because I brought out the brokers? I actually called one of my broker friends and I said, hey, you're my buddy. I get it. Cool. Am I wrong on this? And he goes, no, Lee, you're kind of dead. You're dead on, but it's kind of an unspoken thing because customers don't know and we just send it to who we choose. And I said, cool. Am I wrong, though? He goes, no, you're not kind of wrong. So Diablo Mortgage, if you're the one who's coming out at me for a broker, I'm not against brokers. I'm not. I get it. Sometimes it's a better situation. I've actually not been able to do a loan because we're a direct lender because we don't have the same rules. If my underwriter denies a loan, that's it. I can't repackage and send to another broker or send to another trade line. A broker can. And I've had a loan that I couldn't do. And I said, hey, I said it to one of my buddies. And I said, hey, can you do this? I'll package. I'll tell you what I did, how we make it work. And he got the loan funded for the client, for the benefit of the client. So I'm a fan of brokers. I am. I'm a fan of brokers. I'm also a fan of direct lenders. I'm a fan of anybody hustling that actually helps their client. But I'm also honest about all the stuff. So that's kind of rough sometimes.
Let's help people, man. Let's help people.
Sorry. Yeah.
Donaldson, is it a good time to buy?
If you qualify to buy a house, it's probably going to be the best time for the next 10 years. Probably the best time for the next 10 years. I can give you the math on it, but if you qualify, that's the hard part. Because we get, call it 100 applications a month, and out of those 100, 3 qualify? About right? Maybe 5? Yeah, and we're all waiting for interest rates to go down. And that's not because they have horrible FICO scores. It's because interest rates are so high and the income needed in order to buy the house does not put them in the sweet spot. But they're not far off from the sweet spot. So we get the file ready. We say, hey, listen, when interest rates go down to 6 or 5 or 4, you're at this amount. And they're like, yeah, I can hardly wait. In the meantime, you're ready to go. This is how much you can afford right now because of the interest rates. So they know that. And is it a good time? If you can afford, one of the best times ever.
Bill Gross said, Slim, they're unaffordable because of people like this. Then Bill Gross said, we shouldn't have housing market for a human need.
Bill Gross.
Going in
Bill, we
circles.
appreciate you, Bill.
Going in
Hey,
circles.
yeah. Bill, I like guys like you, man. I dig the Sovereign Citizens. One of my favorite channels to watch is the Sovereign Citizen going up against the cop. They're like, I don't believe in your authority to arrest me. And then click, and they're on the hood of the car with handcuffs on. They're like, I don't believe in your authority. It's hilarious, Bill, but it's life. It's what life.
Well, here's the worst part. I don't even know this can be seen.
Tell me.
Bill Gross has been on here telling us this for
Oh, yeah.
probably a couple months now.
Yeah, he comes on every once in a while,
Bill,
right?
Bill, what are you doing?
Yeah, Bill.
What are you
do you
doing?
count?
No,
Do
no,
you-
no, I'm not being mean.
No, I'm not being mean either.
I'm saying, what are you doing to solve this human need? What movement have you created?
Dude.
What people are you talking to? What organizations are
Yeah.
you heading to solve this problem?
Yeah.
Because if there is one, I want to be a part of it.
I'd like
I
to be
wanna
a part of the
it.
solution too. Yeah, it's not the critic who counts. It's the man in the arena. Google it.
Okay. Ghost. I know it's case by case, but how much would you say to set aside for closing costs?
Ghost, very good question. Here's the biggest factor in closing costs that nobody wants to talk about, but you have to talk about it. But nobody wants to talk about it because the lender doesn't want to own it, because he doesn't want to own it because it's a big number. Here's what it is. Property tax impound. That's the big one. And the lender, I know that if you have a 2.9 property tax base, that closing cost is going to say 12 grand on a decent price house. 12 grand. And you're going to be like, 12,000, that's ridiculous closing costs. That other lender isn't charging me anything, isn't charging me that. I'm like, yeah, he's lying to you to the end. At the end, he's going to have to bring in the property taxes because we all do. It's the law. But is it the lender's closing cost? No. It's the state and the county and the local municipality's closing cost that is mandated to be impounded. What? That's if you impound. If you got a guy who's really shady, he'll say, hey, don't worry about it, don't impound it. Yeah, that's a problem. If that's a conventional loan, you can't do it on FHA. But if you're buying a normal house, like a normal house, and let's just say you're in California, you're buying a $500,000 house. $500,000 house, I'd say property taxes are going to cost you between 7 and 10 grand. Would you say that?
Yeah.
7 to 10 grand. So that's a logical number. Now, in California, we have Prop 13. Prop 13 says that the property taxes can't increase more than 1% a year. It's a strange situation, but our property taxes across the board in California come in at 1.25 unless you go with a builder. If you go with a new build, then there's a bond in there that makes it a little bit more, but we as lenders go with 1.25 across the board, and then we pull tax roll to find out if there's any special assessments on that property. So if you were in California buying a $500,000 property, I would say anywhere from 7 to 10 grand for closing costs, and that's going to include your property tax impounds. If you're in Texas, it could go way higher.
Yeah. Steven, what's the first step on buying a house, finding a realtor, or talking to a bank?
Steven. Thank you for asking. We appreciate you very much. You should find your lender first. Here's why. If you go with your realtor is going to steer you to a lender. And sometimes that lender is great. But most of the time, there's some kind of an arrangement where they pay for marketing.
Lamborghinis.
Yeah, it's illegal to do kickbacks, but it's not illegal to share marketing costs. And oops, they forgot to pay their half. That's a RESPA situation. It gets real deep. But if you pick your realtor first, don't pick it because it's your cousin or because it's a pretty girl or because it's your BFF and you just got a real estate license. You will hurt yourself. That's not a good way to do it. Pick that realtor because they're a top producing realtor and they close deals all the time in your area, not across the country, in your area. Why? Because all real estate is hyper local. There's problems, and so many times we've gotten deals accepted, Chris and Lee, because we're the loan officer on it and they know it's going to close. They'll say, hey, I know Chris and Lee. I've been working with them for years. Cool. Will you take their offer? Hey, I'm going to give them a call real quick, but probably, yeah. And like that happens all the time because the realtors are trying to make their commission. There's nothing wrong with that. A great realtor is worth their money in gold. But until you become a great realtor, you mess up on a lot of people, and a lot of people pay the price. So you should choose your loan officer first. Make sure they're good. Make sure they're damn good. And then so if you came to me with a realtor, I say, hey, listen, I'll work with anybody. I don't care as long as they're professional. And if they're brand new, I'll even coach them. I'll watch the outside of the lines, and I'll tell them this real simple. I'll say, hey, Mr. Realtor, I need you to know something. I work for the client. So if I see something out of line, I'm going to inform you first, and then I'm going to inform the client. And if the client chooses to go with you, I'm good with that. I'm cool. Yeah, but I work for the client. And if you don't do a good job, I have another realtor who would take your spot. I'm not saying that to threaten you. I really don't care. I got no dog in the hunt. I'm not trying to make money off a realtor. I don't care about any of that stuff. But I do care about my client. And usually the realtor goes, well, I appreciate that. And I said, yeah, you appreciate that now. Let's see if you appreciate that when they're in the middle of escrow and we didn't pull an SI or we didn't do certain things. But we look after the client. The answer is go for your loan officer first if you can.
And Steven, if you want to work with someone that kind of maybe mimics you, maybe is more, just like you, maybe wears baseball hats, maybe has calluses on their hand, maybe wears extra medium t-shirts.
Extra medium, schmedium, as you used to say.
Our link is in the bio.
Yeah.
Select apply for a home loan now or give us a call. Let's have a conversation. Kimberly just got quoted 7.625 with a 740 credit and 20% down on a 675 purchase. Bad deal?
Kimberly, I think I could beat that all day, every day, blindfolded on a horse. I think I could beat that, but I'd have to know some more about the scenario. I'd have to know about debt to income ratio. I'd have to know because 740 FICO is pretty damn good. That's pretty damn good. 20% down tells me that you're going Fannie Mae or Freddie Mac. It also tells me that you're a high level. The only reason that I can see why you would get that high of a rate is because you busted through the county loan limits and you went to high balance. On conventional loans, there's your normal conventional conforming. That's what we call them, conventional conforming. And then after that number, you hit high balance. High balance is a little more expensive. And then above that number, you hit jumbo. So some areas don't have high balance, but a lot of areas do, and those rates are a little bit higher. But Kimberly, I think all things being equal, I could beat 7.625 blindfolded on a horse after a drunken stupor. After.
That definitely deserves a second opinion. So hope to hear from
Give us a
Kimberly.
call. Yeah.
Carlos, is seller finance legal?
Carlos. Yeah, sure. All day long.
America.
Yeah, it's America. You get to say, hey, will you finance my property? He says, will you pay me $2,000 a month for the next 30 years? Yep. Cool. Let's do it. Shake the deal and see what happens. Doesn't usually go well.
Yeah. If you honestly think that mental health issues are the only cause of homelessness, you're crazy. I don't disagree with that statement.
No, I don't disagree with it either.
But he is
Bill,
saying a
we're on your
large
side.
group of that is...
Yeah, Bill, I'm on your side, man. Yeah, it's really hard to punch the target when the target's punching with you because I'm on your side.
So I'm going to go into a little bit of this weekend, conversations that I had this weekend. And this is going with Bill Gross is saying. And it was a little argument that I had about people trying to get out of their area, okay? So here was the argument. I said a lot of things in life is choice. You choose live? Where you at.
This weekend?
This was a one-on-one debate I was having with someone. Choice. It's choice, okay? And one of the choices was I had a conversation with one of my friends a few years back, lived in the hood, South Central LA, and he said, we didn't have any options where we're at. We didn't have any jobs. We didn't have this. We didn't have that. Yep. And my whole thing was, well, then you need to really work a little extra harder to get out of your situation, whether that be hopping on the bus for a few hours to get to a spot that does have jobs in order to make things happen. And he wasn't down for that. He was like, that's why they rob and steal and blah, 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 that type of thing. That's a choice. And then I give that argument to somebody else, and they said, yeah, but what happens is, let's say you live in an area that's real shitty, and you actually move like maybe states to a different state that you can probably thrive well in, and you can't get a job right away, and you run out of money, and then you end up homeless, and that's a hard situation to get out of.
Yep.
So Bill, that's why I agree with what you're saying, because that stuff does exist.
Yeah, me too.
It does exist.
For the people who want a little bit of help and a leg up to get themselves who need opportunity, I'm all for that, man. I want to help those people. For the people who want a handout and think housing is a God-given right, get a freaking life. That's not the reality of life. It's not the reality of life.
And yeah, Bill, what's the website?
Yeah,
Put
cool.
for our millions and millions of fans.
You missed the part where he said you're joining the Democratic something Socialist Society.
And that's why I said, what's the website? He said you're excited to hear you're both joining. What's the website?
Cool.
Let the world know. Should I send you guys info for our next meeting? Put it up right here, man.
Put it up right here, Bill. We're here for you.
Daniel,
All right, cool.
My credit is 605 and I have 160K in equity in our house. Can I buy a rental duplex and how?
No. There's no how because it's no. Just no.
Sorry,
I'm gonna tell
Daniel.
you.
Daniel.
I'm
That's
gonna
a
go.
fact.
Yeah, I am
That's
gonna
a
go
fact.
into it. You ain't gonna like it, but I am gonna go into it.
Actually, no, not true. Because if he has equity and he sells, and now he's doing a primary.
You're still 605.
It's still very difficult.
Yeah,
No
you're
doubt.
still 605. No matter how you slice that. Okay, Daniel, here's the reality of it. FICO scores range from 300, that's the worst you can possibly get. I've never seen one, to 850. That's the best you can possibly get. I've never seen one. I've seen an 846 and I've seen a 380, but I've never seen the bottom or the top. Never. But that's what FICO scores range. Okay? Now, FHA starts at 580. Does that mean you have a good loan? No, that's the worst loan they have. But you can get it, 580. Fannie Mae, Freddie Mac start at 620. Is that the best loan? No, it's the worst possible Fannie Mae or Freddie Mac loan you can get, but you qualify. Okay, cool. Your FICO score is a history of how you've paid bills to people who have trusted you with money. That's the reality of it. And I'm sure there's a reason. I had a reason when my FICO tanked. I was like, hey, you know what? I don't want to pay the electric bill in the state of California because I'm moving back and I'm never coming back to California. Yeah, they found me, they caught me, and I had to pay it, and it tanked my FICO score, but I made that choice. I'm man enough to know that I did that. I made a bad choice. But your 605 FICO tells me that there's problems. 605 FICO tells me you are late on something, you didn't pay something. You can't be late on something and then turn around and say, hey, bank, bro, can I borrow $500,000? Bro, we're buds, right? Bro, come on. Help me out. Bro. And then we pull your credit and you're not paying the guys that have lent you in the past. The answer at 605 is no.
Yep, there's your challenge. But you can fix that. But I'll give you the small little tiny window that could work. The small little tiny window. Okay? The small little tiny window is technically you qualify for an FHA loan. Technically. Very difficult to get an approval under a 620. Very difficult. And that approval, if you got approved, you could use that equity as a very large down payment on a very reasonably priced duplex. That may get you an approval because you do have a lot of money down, above 3.5%.
10%. Yeah, you need 10% at that point. Yeah.
And that's what I'm saying, a reasonable price with a big down payment.
Yeah.
So can you do it that way? Yes, you will live in one of the units. You will rent the other unit. And you could do that for a year, and then maybe if you can build your credit even better, you can move on to another property.
Yeah.
So there's a small window, but what I recommend is fixing that credit.
Yeah, Daniel, that's going to be a big deal. Yeah, fix that credit. That's
Go to
a
the
big
link
deal,
in the
man.
bio. Go to the link in the bio. Click the button that says "Fix My Credit" and get that process started. Okay. Sour Girl, thank you for the love.
Sour Girl, I like that name.
It's a song by
Dude,
STP.
Sour Girl, sour.
STP, man. Carolyn.
How's that girl? She's sour.
5.75
She's
is good
crusty.
rate for a rental property. 25% down. Price on the property $236,000.
Carolyn, you kind of hit the home run on that one.
That's a great deal.
You kind of hit the home run on that one.
Great deal.
I'm not gonna lie, 5.75 for a rental property. 25% down is almost. You need 20% down. Price on property 236. 5.75, is that at par or are you buying it? Because that's a pretty damn good rate because it's rental. If it was primary, I wouldn't say that. But if it's rental, yeah. Okay, cool. Whoa, we got a lot of people.
A lot of people. It jumped on me.
Yep.
All right, Bill Gross, we're actually on your website right now.
Yep, cool.
We're
What do we
actually
got?
on your website. It's Sports Make Us More. Move United is what it is. And it looks like it's a nonprofit helping people get into sports. And I'm sure the money's used for good things. So if this is your organization, Bill Gross, there's your
Thumbs up.
there's your piece of fame. Hopefully people will follow.
Rambo, dude. Rambo's in the house. Dude,
First
Rambo.
Blood.
Rambo First Blood.
Greatest movie of all time.
What's the income have to be for 425,000, 3,500, 700 for credit card? First off, Rambo.
That's great credit.
You got Rambo credit for that.
Great credit.
Rambo credit. What would you say off the top of your head? What would you say? 100 grand?
At least $100,000 a year.
Okay, let me check my trusty, dusty, super duper chart Marta. And I'm going to say 100 grand. Yeah, 100 grand. So 90 with a good buy down, maybe, because you can buy the interest rate down to make up for it. But 90K, 100 grand safe. Yeah, somewhere in that range.
Yep. If you're interested, man, you know what to do. Our phone number and link are in the bio.
Yep.
Ruiz Inc. Non-relevant, but is that a Wimbledon? Nice.
Wimbledon's a
I thought it was a
match.
tennis.
It's a tennis match.
Yeah, what's
Wimbledon.
what's
Oh,
that?
hold on. Somebody help us out. Ruiz Inc. Is that a Wimbledon? I don't know what Wimbledon is.
Obviously, it's not because we don't know
Yeah,
what you're referring
unless-
to, but we can clear up what you're talking about.
I'm not wearing a watch. It's not. I don't know.
I'm not carrying a racket.
You're wearing a Rolex, so it's not a Wimbledon.
Yeah, I don't know. Ash, 1922. Hi, guys. We're fixing to get a house next September due to personal reasons. How will the market be? Next September, meaning in 2 months?
2 months or 14 months. In 2 months, it's not going to change very much. If you're watching the Fed, and I am, like every day, like I Google these stuff twice a day, and I have people feed me up videos twice a day. Things aren't looking good for interest rate cuts. I mean, not looking good at all. Like the percentage in Vegas, if you bet on this, which you're not supposed to, but you can, is probably 2% that he's going to make a cut in July. It's not going to happen. We're pretty confident in that. And they were thinking that it's going to happen in September, but they're now thinking, maybe not. There's 4 more meetings. The Fed has said, hey, we might cut 1 time. They used to say we're cutting 3. We are cutting 3 in 24. That's what they said. Things didn't come their way. CPI didn't happen. Stuff didn't happen. All this good stuff, whatever. But now they're going, we might do 1 in 2024. Maybe 1, maybe. 4 more meetings. First one's in July. Next one's September. If it happens in September, you're going to see. Now, here's people like, hey, if the Fed starts cutting in September, will that change the real estate market? If you live in the real world, the best way to tell you this is like this. Okay, cool. Let's just say that you are making $5,000 a month at your job. $5,000. Now, you have a lifestyle. $5,000 a month lifestyle. And they say, hey, you know what? You've done so good. We're going to increase your lifestyle. We're going to give you a raise. And you're like, yes, I get a brand new lifestyle. That's amazing. They're like, cool. We're taking you from $5,000 a month to $5,200. How you like them apples?
Sounds
And
amazing.
you're like, $5,200.
I can put a little more gas
No,
in my car.
you can't be a jerk. You can't say that's nothing. Screw it, because it's not nothing. It is something. It's something.
It's not keeping up with inflation.
It's something. It's not keeping up with inflation. It's something. Now, are you in a better lifestyle situation? Kind of, a little bit. I mean, you can go to a higher end restaurant 1 or 2 days out of the month, maybe.
That's something.
Yeah, it's something. It's not nothing. So you can't ignore it. It's not nothing. Well, when the Fed drops the first interest rate cut, is it going to be better for the housing market? Yeah, it'll be a little better. But is it going to be gangbusters? Is it going to be like, hey, you went from $5,000 a month to $15,000 a month? That's a lifestyle change. But from $5,000 a month to $5,200, it's kind of a lifestyle change, kind of. Yeah, the same thing when the Fed cuts 25 basis points. It's kind of a little bit, but it's gotten factored in already. So theoretically, the cut will happen in September. If it doesn't, it'll happen in October. If it doesn't happen in December. So theoretically, it's going to happen 1 time. Is it going to better the market? A little bit. Yeah, a little bit. A year from now? I don't know. Maybe. According to their chart, we're going to be in the 5s. Yeah. Maybe 4s, 4.5. According to the Federal Reserve, we're going to be at 4.5. Right now, by the way, we're at 5.25, 5.5 Fed funds rate. That's the Fed funds rate. So, if we drop 100 basis points, will that change the market? Yeah, it'll change the market. 100 basis points will. 25 basis points over a year when we expected 75? Probably not.
Yeah. So, guys, there's a box that you fit in, okay? So we have to take advice from the great poet of the last century named Too Short.
I thought it was Tupac.
Get in where you fit in.
Oh, wow.
Too Short.
Bro, I got to sit back for a second.
Get in where you fit in.
Holy shit.
Don't reach outside the box, guys. Don't keep up with the Joneses.
Yeah.
That never works out.
Good Shepherd, Woodbury, Georgia. Yes, we
Hell
will. We do
yeah.
Georgia all
Love
day,
Georgia.
every day.
Love
All
Georgia.
day, every day. You guys have badass accents. They do, man.
They do. Sour Girl, 740 credit score.
That's bang up bad. You're not sour girl. You're sweet girl with 740. Yeah, you better
like
change that
sugar.
name today. Yeah, 740 is sweet. That's not sour.
Ooh, Ash 1922 knows something here.
Again, Epstein was. I think it
She
was.
knows something here.
I don't know.
Did you guys hear? Okay, so Patrick Bet David did an interview with Epstein's brother.
Okay.
Recently, it's on his podcast. It's a big hit right now.
Mm-hmm.
He releases a little bit of data that's pretty cool, so I recommend. It's a good listen. David, what's the minimum FICO you need for a DSCR loan?
That's a very good question, David. David. Minimum where you start qualifying for it.
Now you sound like a finance guy.
680. But
According to my
where it starts getting
calculations.
good, 740, 760, 780, something like that. So that's, yeah,
UMs, you kind of look like George Lopez.
me or him.
I don't know. Figure it out, UMs.
Orale. He does
Ash.
he does the orale, right?
Told Ghost. Yeah, I think so. At least 6%. I don't know what she was referring
I don't know
to.
what you told me.
Ruiz Inc. said Rolex.
Rolly. Wimbledon is a Grand Slam tennis event in England. Yes, it is. I still don't know how. Is this Wimbledon? Is it because we're shooting back and forth and we're going like McEnroe? Did McEnroe win Wimbledon? I think he did.
Did he? You
Long
know
time
who
ago.
did win Wimbledon?
Who?
Absolutely 100% without a doubt.
Who?
King Richard's daughters.
Really?
At least one of
Serena?
them did.
Serena
At least one
and
of them did. I don't know which one. Have you seen King Richard? That's a damn
No,
good
I haven't
movie.
seen it.
I'm not happy with Will Smith, but it's a damn good movie.
Yeah.
Gonna be honest. David said FICO. Okay. Sorry for the distraction. Great info, gents. Thanks,
appreciate you, Ruiz, man. We appreciate you very much.
Is Ruiz the one that said Wimbledon?
I don't know, man. I don't know. I like
Ruiz said
I like talking to all these people. The haters make it fun. Come at me, man. It's kind of fun. Come at me.
Sorry, I should have said September 25.
Yeah, 2025.
Next
You know
year.
what? Theoretically, if you listen to the experts, it's going to be bang up for lenders, bang up for realtors, bang up for escrow, bang up for title, not bang up for clients. Wait, what? You, the buyer, it's not going to be bang up. Why? Well, when the interest rates go down, his paycheck goes up, my paycheck goes up, the realtor's paycheck goes up, and then more people come in and put more houses on the market, and there's more buying demand, which pushes up the housing market, and the housing market goes up. If you actually follow the charts, let's see if I have one available. I don't know, maybe I'm running out of it. Yes, here's the chart. So we are way underbuilt, which means there's not enough inventory. There won't be enough inventory for 10 years. You want to know what industry to get into? Get into construction. Anywhere in construction. If you're a framer, if you're in concrete, if you're in landscape, anything in construction, because for the next 10 years, we got to catch up for the crash we made in 2008. But what that means in September is prices are going to go up. You will be able to afford more because interest rates are going to come down. But does that mean you got a better deal? Probably not. If the best deal is when interest rates are high. That's the best deal because nobody can afford it. So if you can afford it, bang, you're money. Money.
So here's what I predict. Okay, once the news really starts putting out the data saying interest rates are down, interest rates are down, interest rates are down, those that are already in are in a good spot.
Oh, yeah.
Those coming in, it's going to be very difficult. So never react to the news because the news is what's it called, trailing indicator, and you will be in a very tough spot.
David Schoenberg, can you do a
have-
zero down DSCR
news
loan?
for you,
Yeah,
David.
you won't hate this.
No good news.
You're gonna hang up on us in just a second.
But don't hate on us.
Yeah, don't hate on us. I'm
We
just
will
giving you
help.
the facts. I'm just giving you the facts. DSCR loans are investment property loans. There is no such thing as a zero down investment property loan. It does not exist. All you LOs out there, I challenge you to send me one. I challenge you. But DSCR, 20% down minimum. Probably 25.
But your thing says 15.
Yeah, you think if you have an 800 FICO score, I do have one program, 800 plus, tri-merge FICO score. I can probably get you into a 15% DSCR.
Ash, what's the difference between front end and back end ratio for DTI?
Ash, we like you a lot. You're probably a loan officer. Appreciate you, Ash. Front end, real simple, PITI, principal, interest, taxes, and insurance. Everything to do with the house. That's front end. If you have an HOA, it's on the front end. If you have any other type of extra fee that goes with the house, that's front end. Back end is PITI plus revolving debt, which means if you've got a $2,000 a month PITI and a $1,000 a month car payment, your front end is $2,000, your back end is $3,000, and then we put that into the ratios based off of your income. That's front end, back end debt.
Yeah.
Salute from Florida. What's up, Florida? Joshua. Elite G. Help me with that.
El Tiger Joshua.
El Tigre. El Tigre? El Tigre. El Tigre.
Something like that.
Yeah. El Tigre Joshua. Salute from Florida. Love Florida. Used to live in Miami. Coral Gables, actually. Coral Gables is badass. Coral Gables is badass.
David, hey, where are you guys located? I'm a realtor in Los Angeles, Ventura County area.
David. What's up? David's in the house. We're in Riverside. We're right down the road from you. Like, right down the road. Hey, if you go at
4 hours in traffic?
No. If you go at 3 in the morning, shit. 30 minutes, maybe 35 minutes.
Actually, Hollywood
Yeah.
to here is 30 minutes.
Yeah, with at 3 in the morning, Hollywood
yeah.
with traffic,
Yeah.
3.5 to 4 hours, no doubt. This is
Ventura, though,
really what
Ventura's
it's
a
like.
little further out.
Ventura's badass, man. We love Ventura. Yeah, we work in Southern California. We do the loans all across. We can help you. We know the markets very well, very well.
Shoot us a text, David. Let's work together.
Cool.
Holly, the rate just lowered. Should I lock in or is it going to keep going down?
Holly Macaroni. Macaroni. That's like macaroni. Holly Macaroni. Holly Macaroni. The rate just lowered. Should I lock in or is it going to go down? Holly, it's going to depend. It's going to depend a lot on what's your goal. What is your goal? So why would I say that? Why would you even say that? Because let's just say you're a great FICO score, great package, and you're at 6.5 at par. And then your loan officer is going to go, hey, you could have a 5 if you just put 10 grand down. And you could buy the rate down. And you're like, hey, is that a good idea? And he's like, well, would you rather have a $3,500 a month payment or a $3,000 a month payment? Which one would you rather have? And you're like, well, since you put it that way, that sounds very smart to buy down the rate. Yeah, maybe. But if you're going to keep that house for 7 years or more, or it's your forever home, if you're keeping it for 7 years or more, or it's your forever home, I need you to step back, jump back. So we used to say, jump back. Okay, cool. So why? Because right now, this is the Fed funds forecast for the next 3 to 4 years. Right now, the Fed funds rate is 5.25 and 5.5%. This goes all the way out to 26 touching year 27, 2026 touching 27. And the Fed has said we are going to get this down to 2.5%. That's the Fed funds rate. So I need you to know 5.5 to 2.5. That's 3%, or what we call in loan world 300 basis point drop. Okay, cool. Now, is your interest rate based off of the Fed funds rate? No, don't be ridiculous. Why would you even think that? It's based off the 10-year yield. And between the 10-year yield, there's something called a yield spread. And that yield spread is usually between 150 and 250 basis points. Sometimes it gets down to 100, but usually 150 to 250 basis points. What does that mean? Well, if interest rates are 5.5, then your par should be at 6.5 if you got a decent file and the market is on your side. That's what it kind of means. Okay, cool. So what does that mean for you over the 7 years in that jump back and look back period? Here's what that means. It means that the Fed funds rate is going to go down to 2.5% based on their own calculations. The 10-year yield goes in lockstep with the Fed funds rate. It's not mandated, but it has gone for the last 40 years lockstep, which means there's going to be a 300 basis point drop in interest rates. You are now at 6.5 because we already talked about it. Market's on your side. You got a good credit score, 6.5%. 300 basis point drop is going to put you at 3.5%. 3.5% within the next 3 years. Well, why is that important? Because not a matter of whether I'll refi, you are going to refi. But if you're going to refi, why would you flush $10,000 down today to buy down an interest rate? Well, because your loan officer could look back, could look at that bigger picture and go, well, you know, maybe you're going to refinance. And by the way, he's going to want you to refinance here, 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 and here. Because every time you refinance, he makes $15,000. What? Yeah, loan officers get paid good. Every time you refinance, he makes $15,000. He wants you to refinance 4 times before you're done. If you did it correctly, you refinance once and you buy the rate down to the dirt. If you're at 3.5 at par, you can buy to the 2s.
So, Holly, if you're in escrow right now, did you answer that? I don't think you did.
No, I didn't.
If you're in escrow right now, just lock it.
Dude, am I ranting?
It's gonna all the way through. So if you're within 30 days, Holly, lock it. That's what I would say. There's a lot of people out there saying float, 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 but day to day right now, that cost jumps on you.
Yeah, floating is scary. Even
Very
if you're
scary.
a loan officer. If you're a loan officer, you guys are incorrect. Curtis Hofster says we're incorrect.
About what?
I don't know.
If
I don't
we're wrong,
know. Curtis,
we'll say we're wrong.
tell us.
If we're right, we'll
Dude,
correct you.
I go for the honest. And I'm okay with being wrong. I'm not wrong very often. But if I am, I will own it. I will tell everybody. It's just weird.
All right, we got the rapid fire. You ready? We got the rapid fire.
We're rapid fire. Ready?
We're there.
All right, cool.
All right, Yair, is 7.8 a good rate for commercial loan on land?
If you're just doing land, I can't speak to that because I don't really do land. So if you were doing a one-time construct, it's not very good. But if you're doing commercial loans, it's a whole different category. I can't help you with that. Sorry.
All right. Prasut Nepal, how do you recommend to study for the test?
The simplest way is to buy the 40 tests online and just start taking them over and over and over and over again because it's not really learning the business. It's learning how to pass the test.
Curtis, when rates come down, more people will sell that aren't selling with higher rates, meaning more
incentive? Inventory from McCollenberry. Curtis, you're not wrong. There will be more people who come in, but if you actually follow the macro numbers, we're still underbuilt. You can find this at, I think this was ushousing.gov. We were overbuilt in 2006, 7, 8. Then we're underbuilt, way underbuilt. So even if everybody hit the market, because of the pent-up demand, there's not enough. There's just not enough.
Jay Wells from Cutler Bay area.
What's up, Color Bay?
What's Cutler Bay?
I don't know.
Salvador Perez, I need help buying a home.
All right, Salvador, we're here for you. We will help you buy that home. Tune in to us every day. Learn about the market. Then go.
Fast commercial.
Okay. If you need a badass loan, call a badass loan officer. You can reach your badass loan officers by screenshotting this, but it is going to disappear. So you better touch those 2 buttons, screenshot that thing because it's gone now.
Okay, moving on. Right past 6, dog.
Ooey gooey.
No.
Oh, okay.
Ash 1922, not a loan officer, just researching so I can buy my first home.
All right, I will appreciate you. All right.
Oh, man.
Somebody just got ignored, man. Somebody just got ignored. I see what you did with
Jay
that.
Wells, could I join the live and ask some questions?
Yes, well, I'm trying to, if your theme meeting right here,
Give us a call. Give us a call.
Yeah,
Let's
give
talk.
us a call. Call Chris when you're done.
Yeah. Sexual chocolate. Does it benefit to go down payment assistance on FHA?
Most of the time, no. And I can make a real strong case for that. But occasionally, if it means the difference between I can't get a house and it's the only way I can get a house, I'd say let's do it. But if there's any other way, use your 401k, a gift from a relative, save some money, any other way, I'd say better off doing it without it.
Miguel, follow the host. Thank you for the love.
Appreciate
Holly
you.
Said, thank you. I can refinance after 6 months, but it's locked in for now till closing 6.25. That's good. That's not bad.
That's
Holly.
not bad. That's not bad.
Sexual chocolate. What are the pros and cons of down payment assistance? Real fast.
Okay, so real fast, it's not a gift. None of them are gifts. There's always a catch. Some of them, it's a silent second, but you have to pay when you refinance. And before you do that, they will throttle back your buying power. So if I qualified you regular FHA for $400,000 and you said, now I want to see down payment assistance, I would say, cool, You have a great FICO score. You do qualify for 320. But Lee, you told me 400. Yeah, 400 if you're putting your own money in. 320 if you're using somebody else's.
All right. Holly said, thank you. You're welcome. Josh, I'm trying to get my clients into assumable loans with VA. Get the lower rate if they can afford.
Congratulations, Josh.
Yeah.
That's not a very, there's not a lot of people on your side on that one, because here's a real simple
It's an
reason,
uphill
Josh.
battle, man.
Yeah, here's a real simple reason. If you got a loan with me and you put a brand new loan together, Josh, I get paid a commission. So you know what? I'm watching the processor, the underwriter, escrow, seller's agent, buyer's agent, because I got a vested interest. I'm paying a commission. And the bank makes money, so the bank wants to make sure. The processor makes money. Everybody makes money. And because of that, it pushes forward. If you get somebody to assume a loan, nobody makes money. There's no loan officer on it that makes money. The bank already made their money. They don't make any money. So guess who's pushing this loan along? Nobody. Like nobody. There's a little tiny branch in the bank that does assumables, and they take anywhere from 90 days to 9 months to get an assumable loan. It's not easy, and it's because you took one of the dynamics out that somebody's getting a profit on it.
All right, if you guys are interested in getting a home loan, go to the link in the bio, select apply for a home loan now, or give us a call. We'll talk about it. Sign us out, man.
In the meantime, we have been Chris and Lee. We appreciate you. We are out.